If you're an investor and you are wondering if you can get investors to join you on real estate opportunities, the first thing we're seeing is that the difference in the amount of money available from 2022 to here in 2024 is radically different. There is less than half of the money available that was available in 2022. When you're going to investors, when you're trying to find money, you're going to realize that there's just not as much available in the marketplace. Now, why is that? We know that there's so many different things that have impacted people, whether it be inflation and interest rates and the cost of goods, all of these things taking away from people's savings. They just don't have as much kicking around. We also know that all the properties went up in record levels over the COVID surpluses and low interest rates. We know that this caused a reaction by the market. Now, what does that mean for you and I as investors? It means that there's less money available to go and buy investment properties. That means if you've got what they call dry powder, if you've got money on the sidelines, this is an amazing opportunity to be able to go out and over the next, let's call it 12 months, to be able to get valuable properties that have great amount of room for appreciation, that will start cash flowing again, opportunities where people that would normally have been able to access capital, they don't have it available. And you're going to be able to go in and scoop it up. Now, I'm not saying that this is going to be the case if you're looking for a single family home. You may not find the same downward pressure, but in investment markets, if you're looking at income properties, if you're looking at multifamily, you're going to get amazing opportunities because there's just not as many investment dollars available. And so if you've got investment dollars over the next 12 months at least, you're going to find a great buying opportunity. Okay, so here's an amazing thing about what we're looking at with this chart. So it's showing that in 2022, out of all of the real estate deals that they have on record when it comes to investment properties, 3%, only 3% of deals were not funded. There was not enough cash available for those deals. As opposed to now in 2024, we are seeing almost 57% of deals not having enough cash to be able to close. That means almost 60% of the deals out there are going to fold, are going to fail, and they're going to go back to the market, which usually means that the next person that comes through, the next group investment opportunity that comes through, will probably get a better deal. Why are we seeing that drastic change? In 2022, what did we see happen? We saw massive increases in the interest rates. Now, what did that cause? I'm going to slow it down here. Massive interest rate hikes started increasing people's carrying costs. If you've got a home, your mortgage went up. If you've got an income property or multiple income properties, those mortgages went up. Now, did rents go up in the same incremental amount as the interest rates did? Absolutely not. And so landlords, in many cases, are bleeding because they've not been able to raise rents. As much as people would love to complain about how high rents are, landlords have not been able to increase them to account for the increases in the interest rate. And that has had to come out of the profit margins, or in many cases where we had so many people buying in 2022, especially income properties, they are now bleeding and underwater and burning through their savings. So they don't have as much money available to invest in the next property, to invest in these opportunities. And so we already are seeing that. We've seen that with regards to home buyers. They just don't have as much to be able to afford that home. But this has affected even the investors to be able to go into those new units. You know, we would see people buying a house and turning it into a duplex. That creates another 2 rental units. Well, that's not happening. A triplex, making it a fourplex. These kind of things are not occurring. In some cases, landlords are avoiding doing renovations because there isn't enough profit there to be able to cover the costs. And so if we are wondering why some of these things are occurring and why you might be seeing that in your rental, where you're living, your income property, now you can realize what's going on. There isn't the cash flow to pay for these repairs in many cases. And in some cases, those who had invested in those properties are actually underwater, losing money and potentially losing their own homes. This is happening right now in Canada, which is forcing investors to send their money, investment dollars, south of the border to try to get the best bang for the buck. Here's where it gets interesting. Some people might ask what the ideal percentage is of deals that are oversupplied, undersupplied. What's a balanced market look like? And the reality in real estate is that you want these cycles where it goes up and down, because the people that are playing the game get removed in this process. And the people that are real investors will be investing in this opportunity, because right now is where the opportunity is. And you're going to be able to capitalize on that. Now, for the people that weren't doing the research, that were just playing in this game and being frivolous with their money, they're going to lose right now in what we're watching. They have been losing, and we're going to watch as they continue to lose. Didn't run your numbers properly. If you haven't done the proper due diligence, you're going to be losing. And so we know this about real estate. It's a cycle investment. It goes up and sometimes overvalued, and then it comes down and undervalued. And understanding that is the opportunity for us simple folk to be able to make money. You don't have to be one of those market analysts that watches stock markets go up and down on a continual basis and not be able to track it. The great thing about real estate, and why so many people have become millionaires through real estate, is because of this cyclical nature. And you and I can learn those cycles and be able to invest through that process. All right. So, you know that I just came back from the multifamily conference here in Canada, and being able to be there with such great players on the stage. One of the things that we didn't address that we're seeing in this chart right here is debt capital for developments that is not being utilized. What does that mean? It means that there is money that is available, but it's not being used. And you know why? It's because they're looking for better deals. They're waiting for better deals to show up in the development space. We are seeing here in Canada a 40-year low in terms of housing starts, building permits. Why is that really occurring? It's because of the instability that is going on in the market right now. 97% of deals, money is not being deployed, or it's in the balance. There's only 3% that's left that people would say is oversupplied. That means there are so many developments out there that no one is wanting to put money towards those debts to be able to fund that. And so developments are slowing down. Here's a way to look at it. The developers are asking themselves, why would I put this money out into the market? Well, normally the answer would be, is because I'm going to make more money when I build and then sell those units, those properties, the condos, the apartment buildings, whatever. I'm going to make more on the other end after I'm done building. But right now, developers are saying, I'm not even going to take on this debt. I'm not going to do this because it does not look like there's going to be any profit on the other end. Let that sink in for a moment. Developers are avoiding building because they're worried about losing money. So we've just seen, as our current government has been talking about, how many millions of homes they're going to build over the next number of years. And yet developers are more and more afraid to be building because there's no value in it. It's better to sit back and just relax rather than go through all that trouble just to lose money.